Well, hi guys, welcome to this Money Control live stream. Wednesday morning, just about a day to go for the important interim budget. And of course, things not looking great when it comes to the market, given the fact that yesterday the sentiment was sour as Nifty lost somewhere around 200 points or thereabouts after a 400-point up move day before yesterday. What is the trade setup looking like for today as we head into the interim budget, as well as the Fed decision that will be coming out later tonight? And of course, we'll be talking about what to expect from the interim budget this time around. And of course, we'll be taking up all your stock related queries as well. So if you have any queries, keep them coming in on our YouTube feed. We'll try and take them up. But before we move any further, let's take a look at the top stories at this hour. Wall Street ends mixed, with Dow being the outlier. The Nasdaq slips nearly 1% despite earnings beat from the likes of Alphabet and Microsoft. Focus now will be on tonight's Fed decision. The central bank is largely expected to keep interest rates unchanged. Asian markets trade largely lower, with the Gift Nifty hinting at another weak start for the Indian market. Meanwhile, crude gains over 1% on geopolitical concerns and a higher global growth forecast by the IMF. IMF raises India's FY24 growth forecast to 6.7% from 6.3%. Also hikes the forecast for FY25 and FY26 to 6.5%, citing resilience in the domestic demand. Global growth forecast for 2024 has been raised by 20 basis points to 3.1%. L&T's third quarter revenue beats estimate, but margin is a significant miss. Order inflow remains strong with a 25% jump on a YOY basis. Meanwhile, Dr. Reddy's reports another healthy set of numbers, a beat on estimates on the back of strong US sales. And key numbers to watch out for today: Maruti Suzuki is expected to report a 20% up move in the third quarter profit amid better product mix and price hikes. Meanwhile, commentary on US sales will be important to track when it comes to Sun Pharma when it releases its numbers later today. Well, on that note, let me bring on board our technical guest for today. Joining me is Kush Bohra, who's the founder of kushbohra.com. Always a pleasure having you on the show, Kush. Going into the interim budget, how are things looking for the market, given the fact that, we started the week with a bang, right? 400-point kind of up move on Nifty, but yesterday half of that gain was shaved off, and today Gift Nifty hinting at a subdued start as well. So another weak day in the offing for the Nifty?
Hi, Nandita. First up, a very good morning to you and a very good morning to all the viewers. Always a pleasure to be here. I'll take it with both arms. 400 points up and then 200 points down. I was still net 200 points up, right? The way I see it is that this was a consolidatory move just before the budget. From my perspective, the one thing that's happened that is positive is that the base for the Nifty has shifted from 21,200, 22,300 kind of levels to now 21,500 kind of zone. If you see, the put base is also pretty strong there. So I take it with both arms right now, both hands right now. So now my concern is that, 21,800 is the level that we need to watch for. Now, is the market waiting for these events to perhaps get out of the way and then make a move higher? Or will we see, a further few days or probably weeks of consolidation in this band of, let's say, 21,300 and 21,800? My view is on the former, which is once these events are out, the markets will start to make a dash towards 22,000 and 22,200. Just a consolidatory move today could be a similar move, not probably as sharp down as it was yesterday, but consolidation on the indices and stock specific outperformances could be, that could be the play for the day.
All right, stock specific, trying to be stock specific, so to say, as we step into the interim budget. But hold that thought, Kush. We'll come back and talk about specific stocks as well. And we'll also be taking up stock related queries that will be coming in from our viewers this morning. But let me also bring on board, Anshul Saigal, who's a market expert, joining in to take us through what he expects from the budget and what the setup looks like for the market at the current juncture. Going into the Fed outcome later tonight, of course, there were expectations that we could look at a March rate cut, but that has largely been put on the back burner given the kind of strength that we've seen in the US economy, right? So going forward, do you think Fed may look at cutting rates only in the second half of the year now? What are your expectations when it comes to what the Fed is expected to do in the second half of the year? And today, of course, what will you be watching out from the commentary from Chairman Jerome Powell?
Morning, Nandita. Pleasure to be speaking with you. So, as regards what the Fed will do, while I do have a view, but I do think that in the long term, these are only blips. These are one data point events in a long trend sort of movement in the markets. While they have significance in the short term, but in the long term, really they have very little significance. Having said that, it's quite clear that the US economy has done quite well last year. Inflation has also tapered off. And as a result, what we anticipate is that there is likely to be downward pressure on interest rates going forward. Bear in mind that this has been the fastest rate hike that the US Fed has done in its history. So we went from 0% to as high as over 5% in a matter of just over a year. And that tells you the pace of interest rate increases. Now, with inflation tapering off and also, all the concerns regarding inflation abating, as also this being an election year in the US, we anticipate that the US Fed will pump prime the economy as also the markets. And in that regard, interest rates have more downside than upside going forward. As regards the timing of this downside, hard to call, but clearly the Fed has indicated that it will be in the second half. And in anticipation of that, markets, you could expect markets to remain strong globally. And if that is the case, it will have a rub-off effect in India. So we have a very nice setup as regards the markets and the US Fed's interest rate policies in the current year.
All right. And, as we are stepping into the interim budget, of course, expectations are low. Since this is an election year, Street is expecting it to be an election manifesto of sorts. But anything in particular that you'd be watching out for from the budget announcements, interim budget this time around?
Nandita, if you track the government's policy and budget over the years, you will notice that they are loath to giving sort of populist budgets closer to big events. They have followed a very steady path towards fiscal consolidation, and we anticipate that this year will be no different. Our expectation is that given that this in the current year, they may overshoot the expectation on fiscal deficit. That is, they may outperform the fiscal deficit expectation. Even going forward, they may give a positive number on the fiscal consolidation scale. That is one. The second is that the investment in infrastructure, that will only catch pace going forward. The focus of this government on capital expenditure and less so on revenue expenditure will see sort of emerging further in the current budget. Third, there will be a focus on manufacturing going forward. The revolution that we saw in IT in the 2000s, we expect that revolution will be seen in manufacturing in the decade ahead. And the government will be supporting that revolution quite vociferously. They will also be supporting skilling of manpower so that the manpower is ready for manufacturing going forward. Travel, tourism, media, defense, those will also see significant tailwinds in the current budget. But by and large, the theme will be fiscal consolidation and focus on infrastructure and manufacturing going forward.
All right, the focus will remain on infrastructure and manufacturing. Since you mentioned manufacturing, L&T, of course, reported numbers yesterday, strong order inflows. We've seen a lot of order inflows coming in from the UAE, right, Saudi in particular. But margins have been a miss. Within the manufacturing space, would you say that L&T still has more legs from here on, given the fact that we are expecting a push towards capex and manufacturing and defense? So L&T, post the numbers, how are you looking at it now?
See, this is a bellwether large company within the capital goods and infrastructure space. and it has consolidated over a long period of time, and thereafter it has broken out from a range. While I wouldn't want to give direction to the stock, but by and large, I would say that this space, capital goods and infrastructure, will have the investors' fancy over the next 3-5 years. And this company, being the largest, most liquid company in this space, will have the market's attention over this period. There will, of course, be blips. Even this quarter was a blip as regards margins. But by and large, given the order book, given the thrust on construction and capital goods within the country as also outside the country, this company will be a big beneficiary of that trend. And so, given market's interest and also the business of this company being so strong, this L&T should remain quite an attractive play over the long term, say 3-5 years.
All right. Lastly, we've seen, a very sharp rally in the energy pack, right? The OMCs in particular. But there is chatter that the government may look at a cut in fuel prices ahead of the elections. If that really materializes, do you think that the entire OMC rally could be at risk? What are your thoughts here?
The last thing that the markets want is government intervention in companies. And this is a sector where there has been immense intervention from government over the years. But of late, that intervention has to some extent come off. And if that intervention to come back in, clearly markets won't be pleased with that. Having said that, markets are also, they've become used to intervention in this particular sector, and a little bit of intervention will also be absorbed. Given that these stocks trade at, again, very attractive multiples, and they've really done nothing over 5-7 years, maybe a little bit of negativity will be absorbed by the stocks, and the positivity will be looked into and stocks will be bought into. But by and large, this is a space which remains quite attractive in terms of valuations. And markets will not look at a little bit of government intervention too adversely, because they seem to expect it. That's broadly the setup here. But this is for this sector is for the brave. I am not so brave. I will stay away, given there are so many moving parts. However, some people understand this sector better and take bets here.
Right, that's the thought. Then Anshul, I'm afraid we're running out of time, but it was a pleasure having you today this morning and sharing your thoughts with us. Look forward to touching base with you sometime again, later this month.
It will be my pleasure. Thank you, Nandita. Thanks you very much.
Thanks a lot. Kush, waiting by patiently. Kush, let's talk about specific stocks then. Dr. Reddy's, this stock, in fact, this company came out with its numbers yesterday. Healthy set of numbers. And if you look at the stock on a 1-year basis, it has given good returns. But, if you look at the 6-month performance, 1-month performance hasn't really taken up a clear direction. Once now the numbers are out of the way, do you think there could be some bit of upside on the charts? 5,835 is where it's at, 150 odd rupees away from its 52-week highs.
So the stock was already attempting a breakout, and a 5,900 odd was the level where the stock had resisted previously as well. If you see the high yesterday, the high level was also close to that level, 5950. I think with the numbers being positive, there could be a gap up. The stock could move to about 6,000 levels. But I think, after that, it could be a profit booking opportunity. As you said, the stock's not gone anywhere for at least the last month and a half. There could be some selling, coming in on the back of this, gap up that we'll see, or perhaps this breakout that we'll see. So 6,000, 6,100 is perhaps a good level to, book some profits and then perhaps cash in again, if the stock dips.
All right. And thoughts on Reliance Industries, because the day before yesterday, it saw a very sharp up move. Yesterday again came under some bit of profit booking, so to say. But what's your call there? Do you think that it could see a reversal today? Some bit of buying could emerge on dips?
Sure. So Nandita, the call's the same that has that it has been for the last year, perhaps a little more. Buy Reliance on dips. Every dip in Reliance is turning out to be a buying opportunity, and as we've mentioned in our advisory report as well, that this is one of those classic cases where you hold on to a stock for the longest time, and the week that you're not holding it in, and you sell off, and the stock moves up and gives you those stupendous returns, right? So this is the case where stock jumped drastically 7-8% on Reliance in a day is a huge move, right? Some profit booking after that was expected, so the view remains the same. This is not a trader counter. As far as investments go, buy dip, buy every dip. 3,000 is from a near-term perspective a very convincing sort of a target. Beyond that, 3250 and 3300 are the levels that we're looking at on Reliance.
All right, that's for Reliance. What about a PB Fintech? The numbers came out yesterday. It has swung to a profit, 37.2 crore kind of profit coming in vis-a-vis a loss of 87 crores in the previous year. And revenues have also been pretty steady, 42% or thereabouts. But PB Fintech as a stock has done fairly well, within the new age pack. How would you advise investors and traders to look at this particular stock now?
So, in fact, I think it was somewhere closer to the last quarter of the last year where a lot of these stocks made their bottom and then started to rise up. PB Fintech was also one of the names. Of late, the stock has been resisting around that 920, 925 kind of levels. With some kind of positivity from the result perspective, perhaps this level could be taken out. But I will use that as a profit booking opportunity right now, because the stock has a tendency of running and giving a breakout and then perhaps consolidating for a while. So any kind of up move close to 925, perhaps even 950 kind of levels, I will take it as a profit booking opportunity.
All right, profit booking opportunity around 950, 960. But we are getting some queries on some of the power stocks now. Power stocks have, of course, have seen a stellar run. We have a query on Tata Power on our feed, Kush. Within the power stocks, how is Tata Power stacked up on the charts right now?
Beautifully, and incidentally, it was our call on our advisory service for a while now. It's done fabulously well. In fact, if you're talking about the budget, which is just about a day from today, power is one sector we feel that could see some sort of a positive news coming their way. Is a lot of it priced in? We'll know once we know what kind of announcements are expected. So Tata Power looks good. 400 is perhaps a good level for the stock to head to in the near term. Once that is taken on 425, perhaps it should be the next level. Even if there isn't anything majorly positive and perhaps the stocks give out some of these gains, about 370, 365 are a good are good levels where one can again enter into this stock and hold for the targets of 400 and 425. Support comes in at about 350 kind of zones.
All right, support at 350 for Tata Power. Hope that answers your query. We are getting a couple of queries on Tata Tech as well. Mahesh Pawar wants to know your thoughts. Numbers came out recently. Recent listing, but any thoughts on this stock? Tata Tech had a stellar listing, right? But over the last few days, it has come under some bit of profit booking. Any thoughts here?
As you said, I mean, from a daily perspective, the data is very limited. But if I probably go on a smaller time frame, then the trend's very clear. I wouldn't enter into it just now, but I'm assuming the rationale for asking the question is he still holds the stock after investing. So I suppose 1050, 1100 is perhaps a good level to keep your stop losses at. If that is taken out, I think the stock could dip. However, on the smaller time frames, the stock's gone into oversold territories. So there could be some sort of a rebound that can be expected on this. So 1150 to about 1175 on the rebound is perhaps a good level. Should be taken as an opportunity to sell if this was from a trading perspective.
All right, that's the view then on Tata Tech. But the next query is coming in from Vijay. It's on Star Health. Star Health, it's coming off its 52-week lows. And in the last 6 months, we've seen, the stock has been in a downtrend, has been trying to make some bit of a rebound over the last 1 month or thereabouts. But would you say that there is a clear trend emerging at the current juncture, or do you think it's fairly range bound on the charts now?
Well, it's very clearly the latter, because if you see the stock, as you said, has attempted a rebound, but beyond that, there isn't a significant upside that we've seen on the stock. A healthy sign is that we've seen the stock cross its 20-day and its 50-day, so its near-term moving averages. The stock's taken out those levels, but even that is if you see on lack of pretty subdued volumes, and the 200-day moving average is still a bit of a resistance. So for me, this stock is an exit or an avoid at current levels. It's gone into a consolidation mode. I know a lot of PMSs and fund houses also are quite keen on this, but the stock's actually not done pretty much anything in the last couple of months at least. So for me, Star Health at the moment remains an avoid, and if someone's holding it, perhaps 550 is a good level to place your stop loss. Once that is taken out, you're better off exiting the stock.
All right, avoid Star Health at the current juncture. Hope that answers your query. The next query is coming in from Jeevan, and he wants to know your thoughts on Jupiter Wagons. The rally that we saw has somewhat run out of steam, because if you see over the last 5 sessions, it has been in a downtrend. Do you see more downside from here? How is the setup looking like? Because it's very close to its 52-week close.
Jupiter Wagons, right? JWL.
Yeah, that's correct.
No, quite contrary, Nandita. I think the stocks actually had a stupendous rally. I mean, if I look at somewhere March, last year, the stock was at about 80, 85 kind of levels, and it's actually run up quite smartly to these 400 levels. So for us, Jupiter Wagons is a very clear buy. For me, any kind of decline close to its 20-day moving average. If you see, the stock has a tendency of respecting its 20-day moving average and then recovering, and that comes in slightly deep from here, about 365 kind of levels. So any dip closer to those levels for me will turn out to be a buying opportunity. Now, the fact that a lot of these railway names had run up quite sharply, even in the last a couple of weeks, and then are seeing some profit booking is actually a healthy sign from my perspective. So any dip closer to 365, 370 kind of levels will be a buying opportunity and could make for a good trading gain. The immediate target for me then would be 410, and once that is taken out, we're looking at 440 kind of levels on Jupiter Wagons. So if you've got a position on this, I would suggest hold. 365 is again a good entry point. Stop loss comes in at about 340, where the 50-day moving average is placed. So once that is taken out, perhaps the trend could change. But up until then, I think there's a fair bit of positivity in this stock.
All right, fair bit of positivity. Of course, over the last 1 year, the stock has jumped over 200 points, as Kush was just mentioning. But the next query is coming in on a Voltas. Tapan Thakkar wants to know your thoughts on this particular stock, whether one should really buy into the stock at current levels. Numbers came out yesterday. And the stock, I think numbers weren't all that enthusing, because profits have dropped over 50% on the back of higher expenses, right? Looking at the stock, last 1 month has gained 4.5%, but I think at this point, would it really warrant a buy, given the fact that numbers haven't enthused, and there were concerns about market share as well when it comes to Voltas. So how should one go about this particular stock? Should one buy?
No, the answer would be to avoid this, perhaps even exit if someone's holding it. Even if you didn't tell me the numbers, I would have perhaps said that there is a very clear pressure that's there on the stock. And very interestingly, the momentum indicators and some of the setups that we track, when we study these stocks, are actually showing a much sharper decline than the price itself. That is suggesting that there is some more pain to follow. The stock actually on the charts from a price perspective appears to be only from only in a consolidatory mode. But as I said, some of the setups that we're tracking are actually showing a sharp downturn, which, as I said, could mean that the stock is in for a slide. And as you said, the numbers aren't so great. So perhaps that's the trigger that the stock was waiting for, for giving a crackdown. Now the levels that I'm looking at are immediately 990, and once that is taken out, I wouldn't be surprised to see a slip even to the 960 kind of levels. So for me, Voltas is at the moment a very clear avoid. If someone's got it, my suggestion would be to book profit if they are in a profit, or as I said, exit 990, 995 are the levels where I would place my stop loss and exit Voltas.
All right, avoid Voltas. If you have positions, perhaps you should exit. That's the call. But the next query is coming in from Nilesh Jain. Wants to know your thoughts on Adani Total Gas post the results. Within the Adani group of stocks, I think Adani Total in the last 1 month has gained just about 2% or thereabouts. But Adani Ports, Adani Enterprises, these stocks have done fairly well. So how does Adani Total Gas stack up on the charts vis-a-vis an Adani Enterprise and an Adani Ports?
I like how you frame the question. Given the relative outperformance in the couple of other stocks, my suggestion would be to move on to those. Adani Green, Adani Ports, even Adani Enterprises for that matter. Even after the kind of sharp moves that we saw, in the last quarter of the last year, they're still rising. Adani Total Gas, in fact, has gone into consolidation. So a suggestion would be to switch. The better options would be Adani Ports or Ambuja Cements, if he's open to selecting any other sector for that matter. So the suggestion, as I said, would be to switch from Adani Total Gas, perhaps to an Adani Ports or even Ambuja Cements.
All right, Adani Ports or Ambuja Cements, these are some of the preferred picks when compared to Adani Total. But, let's take up one last query then. This one is coming in on REC from Prathamesh. He wants to know your thoughts on this particular stock. Do you think the risk reward is favorable for some of these power, transmission stocks like REC, PFC now after the kind of rally they've seen in the last 6 months at least?
It depends on the horizon. If you're looking at a trading jump from here, then perhaps, the risk reward ratio will not be in your favor. 500 is a psychological resistance, but also if you see from an options perspective, there's a very heavy call writing happening at all strikes, 500, 510, 520. So that is suggesting that, there isn't too much of an upside from here, at least on the derivative data that we're looking at. So from a trading perspective, perhaps not. If the budget doesn't have too much for these stocks, then you could see a slip anywhere close to 475, 460 kind of zones would make this a favorable trading bet. So from a trading perspective, I wouldn't buy REC right now. I will hold because the momentum's there, but for a fresh entry, not at the moment. 475, 460 is the zone where I'm looking at. If the stock drops to those levels, that will make it an attractive trading bet.
All right, that's the call. Then on, very quickly, I would want to take another query that's coming in from Trilok. This is on Allcargo. Wants to know your thoughts on this stock from a long-term as well as short-term perspective. Your advice?
From a short-term perspective, this is an avoid. The stock's seen a sharp correction and hasn't really made any kind of bottom formation patterns yet. 71 to 74 are the levels that we're looking at. From a long-term perspective, perhaps you could hold on to it. The stock's done decently well, nothing to write home about, but fairly decently well. So you can hold on to this. As I said, 70 remains a strict stop loss. On the upside, we're looking at levels of about 85, and once that is taken, about 95 kind of zones. So from a long-term perspective, there isn't too much of an issue. You can hold on to it. From a short-term perspective, it will be an avoid.
All right, long-term hold, short-term avoid, that's the call. Hope that answers your query, but I'm afraid with that we've come to the end of this query segment. But Kush, two questions really before I let you go. A, what are you recommending for our viewers for the next couple of trading sessions? And secondly, how should traders really position themselves as we step into the interim budget?
Sure. For paucity of time, I'll try and answer these quickly. Two stocks, Endurance Tech, is our buy. 2120, 2170 are the targets. 2030 is the stop loss. DLF looks good. 805, 825 are the targets. 775 is where I would place my stop loss. So Endurance Tech and DLF are the recommendations. From a budget perspective, I'm glad you asked this question. I'll try and answer this specifically for option traders because you see a lot of option activity. The VIX has spiked up. So everyone who probably learns options for the first time wants to do like a long straddle, long strangle kind of trades, hoping a big move will give them money. Suggestion very clearly to them is avoid, because the volatility once that subsides will eat into your options premium and you won't make money. That is not to say that option selling should be the strategy. It's a very risky one. So don't do any option trading strategy just around the budget, especially not the long ones. Once the budget is over, depending on the direction, you can play your move. Also, indices, likewise are an avoid. For me, the action will remain stock specific. Power, infrastructure, and agri themes are the ones that we're looking at, from specifically the budget perspective.
All right. Thanks a lot for that advice, Kush. And, as usual, it's always great catching up with you. It's a pleasure to have you on the show.
Likewise, Nandita. Have a great day.
Thanks, same to you. Well, with that, we've come to the end of this edition of Morning Trade. Thanks a lot for tuning in. But of course, don't go anywhere because coming up next is Opening Bell.